and silver is going to play out. It all is based upon what I look at is the inevitable 1-to-1 ratio, which will eventually achieve, or a 2-to-1 favoring gold ratio, the gold Dow ratio at one point here, and that's really it. That's where we're going to see the movement. It's all going to happen at a point where the debt market implodes on itself. This is interesting, the move price action here of silver, gold, silver more specifically. But we haven't seen anything yet. This isn't even the beginning, in my view. I still feel, even at today's price, it's the most undervalued financial asset of all time. And my bottom target right now is $650 an ounce. Could be potentially way more than that.
Market analyst Gregory Mannarino believes silver is on the verge of a historic revaluation, driven by an inevitable collapse in the global debt market. According to Mannarino, silver's price action is ultimately tied to extreme ratio resets, including a potential 1-to-1 or 2-to-1 gold to silver ratio, alongside a major realignment in the Dow-to-gold ratio. He argues that current movements in silver barely scratch the surface of what's coming, stating this phase is not even the beginning. Despite recent gains, Mannarino considers silver the most undervalued financial asset in history, suppressed for decades while debt, equities, and currencies inflated. As systemic risk builds and confidence in fiat markets erodes, he expects capital to rush into hard assets. His conservative price floor for silver is $650 per ounce, with the possibility of substantially higher levels as debt markets implode and monetary trust breaks down. Now, we present the clips from Gregory Mannarino's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
I think we all know that. It's interesting that you brought this up. Just 2 days ago, I was talking to a very good friend of mine who had a few dollars laying around at the time, and silver was $8. And I said to him, what are you going to do with all this cash you have laying around? He goes, I'm really not sure what to do with it. What would you do with it? I said, I'd go out there and whatever I had, I said, I'd go buy silver right now. He didn't buy a single ounce. And he went back, and this is just 2 days ago. He's like, Greg, I could kick myself for not listening to you back then. This was $8. Incredible. And then when it hit 14, we had the same conversation, and he was still mulling it around if I should do it, if it's too late. And I get the same thing now as you probably do as well. People every day, they write to me, Greg, should I buy? Should I buy? Should I wait for a pullback? My answer is buy. Wait for a pullback for what? It may move around a little bit. Of course, it's going to. Trying to pinpoint that, I mean, you gotta be nuts. I don't play that game, and no one should be playing that kind of a game. I still feel, even at today's price, it's the most undervalued financial asset of all time, and my bottom target right now is $650 an ounce. Could be potentially way more than that, depending on, again, what happens in the debt market, which people are finally realizing, I think, at least I hope so, more and more, at least those that follow our work, that the United States has devolved into a debt expansion empire on a scale that no one can actually get their head around. It's an incredible thing. Although you and I have been saying this would happen for the longest time, it's not done. It can only function by expanding the debt, by devaluing the currency on the back of artificially suppressed rates. That mechanism is not going to stop. The world doesn't want the United States anymore in its current capacity. They don't want our products. They don't want our currency. They certainly don't want our debt. And they've been pushed out of the U.S. debt market via the Treasury Fed complex, has cornered the market. And I think that people don't realize the gravity of how important this is, that now we have this Fed Treasury merger in here, literally buying it all By keeping rates artificially suppressed, they've made themselves the lenders and buyers of last resort. No one wants it. No, who'd want to buy our debt here? There isn't. This mechanism has pushed natural buyers away. So, I mean, this is just another thing that you and I have been speaking about we've been out here for a long time. And if people were to sit back and look at our talks that we've had over the years, they would say, wow, this is kind of very incredible that these guys were able to put this into perspective, but it's just too simple. If for me, all I do is, I look at dynamics that are in play. I understand clearly how cash moves through the system, why it moves through the system, and the mechanisms behind it. And that allows us to say things like, for example, silver is so undervalued, even right now, gold, incredibly undervalued right now. We have, again, the debt market is beyond hyperbubble status, and everything is deriving value from that mechanism, including the stock market, which is nothing but a derivative of vast debt expansion, which is not going to stop. We got some volatility today in the market. I called this a week ago. I said, watch what may happen here if the 10-year yield breaks out above its range, which it did today. The stock market is getting hit pretty good. The dollar is getting blasted right now on a relative strength basis. That tells me that this is nothing that should alarm anyone here. They're not done inflating the system, suppressing rates, killing the currency. They're not done. All the plumbing, the wiring, the laws have been put in place now to bring us to this tokenized system. The New York Stock Exchange is now going to be operating on that system very soon, a tokenized system. The whole system is going to be tokenized. Deposits. It's an incredible thing to witness, and their target is the middle of this year. By the way, with regard to tokenization, in fact, I just put a paper on it earlier today. You should have it in your inbox as well. And feel free to expand on that and use it any way you want to. It's funny how people scoffed at people like you and me from a long time ago. Look, I don't know if these people are completely disillusioned. They're afraid, fear. Okay, you push them out of their safety little box, their little paradigm, and they lash out at you. And now these same people are going, whoa, maybe I should have listened to these guys. But for these kind of people, it's fine, because even them, even if they haven't woken up, now is still the right time, in my opinion, to still load up on these assets. And again, every single day, I get these questions about it, and I'm not going to waver from my thought process with regard to financial assets, how they work, how the market works, the debt market monster we have, and the economic wrecking machine that's destroying us from within here in the United States. It's not going to change.
Gregory Mannarino argues that silver remains the most undervalued financial asset in history, even at current prices. He points to decades of missed opportunities, recalling when silver traded at 8 and 14s while investors hesitated, waiting for pullbacks that never mattered. Mannarino believes timing short-term moves is pointless in a system driven by relentless debt expansion, currency devaluation, and artificially suppressed interest rates. According to his analysis, the U.S. has become a debt expansion empire, with the Federal Reserve and Treasury effectively merged, crowding out real buyers of U.S. debt. As confidence in fiat currency, bonds, and equities erodes, capital continues flowing into hard assets. Mannarino maintains a conservative silver price floor of $650 per ounce, with far higher potential as debt markets deteriorate. Let's get back to the interview.
Gold Reserve Act of 1934, sign it. Revalue gold at whatever he wants to, monetize it, and that's it. The Fed ends. In fact, that would bring them the entire world central banking system. Since we know that's not going to happen, the alternative would be to Volckerize the markets, to vastly raise rates here, return purchasing power to the currency. People don't even make the basic connection of lower rates being the mechanism that weakens the currency. So when they hear a president, a politician say we need lower rates, and this is again a repetitive pattern out of Trump's mouth since his last tenure, which he actually called them negative rates, he meant he was going to dissolve the dollar. This supports the cancel-on effect, wealth transfer. It destroys the economy. It also is very positive for the stock market. The reason why they won't do this would, number one, it would return power to the people. If people understood that 90% of the assets of the earth, 90% plus percent are owned by the 1 and 2 percenters, they would realize why this mechanism can't happen. If we were to so-called vulgarize or vastly raise rates, return purchasing power to the currency, people would go out, they would start consuming, and our factories would start producing. We have not seen what we're seeing now with regard to U.S. industry since the long depression of the 19th century. 10 consecutive months of contraction with regard to U.S. manufacturing factory activity. We could turn it all around. What happened? By vulgarizing the system and returning purchasing power to the currency, it would wipe out, it would cut the stock market in half in a day. And that would, again, who owns 90+% of the markets of the world, is the 1 2 percenters. They would take the hit. They won't be allowed, that won't be allowed to happen. We can't do that. They will not return purchasing power to the currency in any way, shape, or form. All they're talking about is more currency devaluation, further artificially suppressed rates, vast debt expansion by the mechanism of governance of the United States, which is what? An engineered crisis to crisis mechanism, which is doing one thing, allowing for vast debt expansion. If people really understood what was happening, there would be a revolution. And I think people are starting to push back. Is it too late? I'd like to say no, but more and more people need to band together to unify, to punch holes in this. We need people to speak with a one voice and say no. What they have done psychologically to the people is, again, by creating this state of fear and a state of struggle, dependency on the current system, people don't know what to do. They don't know what's up, what's down. The propaganda, it just doesn't stop. We were just told by President Trump that this is the strongest and fastest economic recovery in history. Scott Bessent today, who's all over the mainstream media, is out there parading America is back stronger than ever. Really? I don't see that. I think he's speaking to the 1 and 2 percenters who are back and stronger than they've ever been and will continue to benefit from the mechanism of currency devaluation, artificial suppressed rates, vast debt expansion, and the governance of the United States, which moves from nothing but a crisis to crisis mechanism. When people stand up and say, no, I've had enough, I am worth something, then of course it would turn around. But until that time, America will continue on its pathway into a scorched earth scenario. And what's going to be their solution? More currency devaluation, artificially suppressed rates, and then, of course, a new system. That's why Trump signed the Genius Act in July. And that's what we're moving now to tokenization. And this is just the beginning. From years ago, you and I spoke about how everything's going to be fully tokenized. The word tokenization wasn't even whispered. No one even heard of it. Now, here it is. Okay. So I think people that are sitting here listening to this, I think they get it. The people that follow our work. And I love that. But the bottom line is they got to share this stuff. They got to get it out there. And look, as I always say, I'm not here to change anybody's mind. I want to present what I believe are real facts. And then people do their own research. How's their life looking? How's the economy looking? For the 1 or 2 percenters, this thing looks fantastic. For everybody else, they're losing. America has never lost more than it is losing now, especially on the world stage. Not only do we have a world that is de-dollarizing, henceforth while we're seeing the price action of gold and silver and other assets as well. People don't want to be in on dollar. They don't want our debt, as we know that. They don't want our products. We can't export anything because, again, no one wants anything. The United States is being isolated by the rest of the world. And it just seems like that's the president's mission here, to isolate the world via, what's our economic policy? To expand debt, to create crisis to crisis. We're not winning here. And when people will start to wake up, especially those people, no one voted for this. No one thought we would be here, least of all the people who wore the red hats. They completely believed things were going to be different because, again, they were lied to. They were told every tale on the face of the earth, every piece of propaganda that could be fished out of whatever rat hole they could pull it out of. And I'm hoping that it's these people are going to finally say enough is enough, and all of us could finally get together because we've been divided, and a divided nation cannot stand.
The Gold Reserve Act of 1934 remains a powerful reference point in today's monetary debate, highlighting how governments can redefine gold's value to reset the financial system. Critics argue that instead of restoring purchasing power through higher interest rates, policymakers continue choosing currency devaluation and artificially suppressed rates to protect asset markets. This approach benefits the top 1–2% who control most financial assets, while eroding real wealth for everyone else. Raising rates would strengthen the dollar and revive domestic production, but it would also crash overinflated markets, an outcome elites won't allow. As de-dollarization accelerates globally, gold and silver prices reflect declining trust in fiat currency. Meanwhile, tokenization and digital systems advance, signaling a structural shift rather than reform. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.